Fortinet Inc., a Sunnyvale cybersecurity company whose FortiGate firewall is the most deployed next-generation perimeter defense on Earth, protecting over 700,000 customers in 180 countries.
FTNT posted a massive earnings beat this quarter. EPS came in 33% above consensus, driving a 20+% single-day stock reaction.
The story begins in 2000. Ken Shi founded Fortinet in Sunnyvale after previously co-founding NetScreen Technologies. The original FortiGate appliance used a custom ASIC chip to run firewall functions at hardware speed.
Fortinet IPO'd on NASDAQ in 2009, already profitable. By 2019, it had become the #1 network security vendor globally by revenue, overtaking Check Point after a decade of consistent growth.
The 2022 SaaS platform launch integrated SD-WAN, Zero Trust Access, and cloud security under one management plane, completing the security fabric vision that ties together network, endpoint, OT, and cloud environments.
Service revenue, FortiGuard subscriptions, and FortiCare support contracts generates 63% of total revenue at high margins. This is now the dominant and fastest-growing revenue layer.
Product revenue from FortiGate hardware appliances accounts for the remaining 37%. Fortinet's custom ASIC chip design keeps product margins well above commodity hardware alternatives.
Gross margins reached 81% in fiscal 2025, among the highest in enterprise hardware security, reflecting the growing subscription mix and the margin leverage of Fortinet's vertically integrated chip-to-software design.
Operating income reached $2.1 billion on $6.8 billion in revenue, a 30% operating margin on a platform that is simultaneously expanding into OT security and SaaS.
Palo Alto Networks is the primary enterprise competitor. Larger total platform, deeper cloud-native security portfolio, but at lower gross margins due to a more services-heavy delivery model and heavy M&A spending.
CrowdStrike dominates endpoint and cloud-native security with near-full subscription revenue, a different attack surface from Fortinet's network and OT focus, though the SaaS layer increasingly creates competitive overlap.
Fortinet's moat is the ASIC advantage. Custom chips deliver firewall throughput at price points competitors running standard CPUs cannot match, locking in mid-market and distributed enterprise deployments for years.
Fortinet protects over 700,000 customers across government, enterprise, service providers, and critical infrastructure in more than 180 countries, the broadest enterprise security deployment footprint globally.
North America is the largest revenue geography. Europe has a strong critical infrastructure and financial services base. Asia-Pacific is growing, led by OT security deployments in Japan and Australia.
Ken Shi co-founded Fortinet in 2000 and has served as CEO since day one of the longest tenured founder CEOs in enterprise technology at 25 years and counting.
Shi's engineering background, Stanford Electrical Engineering, ASIC design expertise, defined Fortinet's hardware-first differentiation, which remains the foundation of its margin advantage in a software-dominated security industry.
Fortinet, the cybersecurity platform built around the world's most deployed firewall, $6.8 billion in revenue at 81% gross margin, expanding into OT security and SaaS.
Q1 2026 delivered a 33% EPS beat versus consensus. Billings acceleration, SaaS attach rates, and the OT security pipeline are the three catalysts we break down in the full earnings episode.
Fortinet just delivered a 32% non-GAAP EPS beat, 20% revenue growth, and a full-year guidance raise, and the stock surged 23% in a single session. Revenue of $1.849 billion crushed estimates. Deferred revenue is growing, the free cash flow margin is above 50%, and the cybersecurity spending environment has clearly turned. This is Charged Alpha. I'm Hudson.
And I'm Lana. Fortinet is a network security platform headquartered in Sunnyvale, California. Its core product is the FortiGate firewall, delivering intrusion prevention, VPN, web filtering, and application control. Beyond the firewall, Fortinet sells FortiSaaS for cloud-delivered security, SD-WAN for branch networking, endpoint protection, and centralized management. The model combines hardware sales with high-margin software subscriptions. Market cap post-earnings, approximately $82 billion.
Ken Shea co-founded Fortinet in 2000 and remains CEO, over 2 decades leading one of the most successful cybersecurity businesses ever built. He pioneered a security operating system on purpose-built ASICs, giving Fortinet a durable performance and price advantage in the firewall market. She has positioned Fortinet as the platform consolidator against Palo Alto Networks, Check Point, and CrowdStrike.
Q1 2026 revenue came in at $1.849 billion, up 20% year-over-year from $1.541 billion. The consensus estimate was roughly $1.8 billion, so Fortinet beat by 2.7% on the top line. That 20% growth rate is a meaningful acceleration. In prior quarters, growth was running in the mid to high teens.
Non-GAAP EPS of 82 cents beat the 62-cent estimate by 32%. That large EPS beat relative to the modest revenue outperformance reflects strong operating leverage. GAAP EPS was 72 cents, up from 56 cents in Q 2025, a 29% year-over-year improvement in GAAP earnings per share.
Gross margin held at 80.3%. GAAP operating income was $580 million. Non-GAAP operating margin came in at 36%, several points above the guidance range entering the quarter. These are elite margins for a company that still ships physical hardware alongside its software platform.
Free cash flow for Q1 was $1.007 billion, a 54% free cash flow margin on $1.85 billion in revenue. Operating cash flow was $1.077 billion. Fortinet carries $3.3 billion in cash and short-term investments against only $500 million in debt, a net cash position of $1.7 billion.
Deferred revenue reached $3.726 billion at quarter end, up from $3.636 billion in Q4 2025. Deferred revenue represents money already collected for services not yet delivered, guaranteed future revenue. Growing deferred balances signal that new bookings and contract renewals are outpacing recognition, which is the most reliable leading indicator for Fortinet's subscription business momentum.
Fortinet raised full-year 2026 revenue guidance to $7.7 to $7.8 billion, roughly 20% growth at the midpoint. Non-GAAP operating margin guidance was raised to approximately 27.5% for the full year. Raising guidance by a material amount after just one quarter signals management confidence that the demand environment is sustaining well above prior planning assumptions. Entering fiscal 2026.
The analyst community heading into Q1 carried a consensus hold, 30 buys, 33 holds, 5 sells, reflecting uncertainty about whether the firewall refresh cycle had turned and whether enterprise security budgets were recovering. The 23% single-session rally suggests the street's assumptions were materially too conservative.
Buy-side reaction focused on the deferred revenue trajectory and EPS upside. Bulls argued Fortinet's platform consolidation strategy, customers standardizing on a single vendor for firewall, SaaS, and SD-WAN, is winning deals at the expense of point solution vendors. Every new subscription contract booking shows up in deferred revenue first, making the $3.7 billion deferred balance a reliable forward demand signal.
The hold community had two concerns. First, hardware exposure. If enterprises shift to cloud-delivered security faster than expected, FortiGate appliance revenue faces structural headwinds that software subscription growth may not fully offset. Second, valuation. Even before the 23% pop, Fortinet was not cheap, approaching 42 times trailing earnings.
Bears focused on Palo Alto Networks' competitive pressure. Palo Alto's platformization strategy explicitly targets Fortinet customers with subscription bundling incentives designed to displace existing vendors. After Q1, the critical question is whether Fortinet's new deal win rates and renewal retention are holding despite Palo Alto's aggressive bundling offers in the same enterprise accounts.
The guidance raise is the most important signal from Q1. Companies operating in genuine demand uncertainty guide conservatively. Raising full-year revenue guidance by a material amount after one quarter means Fortinet's sales pipeline and contract visibility gave management the confidence to commit to a higher number publicly. behavior that reflects a demand environment meaningfully better than prior year start planning assumptions.
The bull case anchors on secular demand. Enterprise network security is not discretionary. Every organization is expanding its digital attack surface, while threat actors deploy generative AI to craft more targeted phishing and ransomware at scale. Fortinet's integrated platform positions it at exactly the consolidation point where enterprises need to simplify a fragmented security stack.
Platform economics amplify the bull thesis. When a customer standardizes on Fortinet for firewall, SaaS, endpoint, and SD-WAN, switching costs become structural. Each incremental product increases the cost and complexity of displacing the vendor. Fortinet's 80% gross margin and 50+% free cash flow margin demonstrate the platform model is delivering premium economics, not just revenue growth.
The firewall refresh cycle adds near-term optionality. FortiGate hardware deployed during the 2020 to 2022 surge has been in service 4 to 6 years, approaching standard refresh timelines. Replacement cycles typically increase spend as network complexity grows. A broad refresh layered on organic subscription growth is a multi-year hardware and attach rate tailwind.
The bear case anchors on valuation after the 23% re-rating. At $82 billion market cap and 42 times trailing earnings, Fortinet embeds a continuation of 20% growth and margin expansion for multiple years. Any deceleration, from macro pressure, competitive displacement, or cloud-native erosion of the firewall market, triggers meaningful multiple compression.
Hardware exposure is a structural overhang. A meaningful slice of Fortinet's revenue comes from FortiGate appliance sales, physical boxes deployed on premises. As zero-trust architecture replaces perimeter-based models and workloads shift to hyperscalers, on-premises hardware faces secular headwinds. Fortinet's SaaS and cloud offerings are growing, but hardware could face pressure before software fully compensates.
Geographic risk is embedded in Fortinet's international exposure across Europe, the Middle East, Africa, and Asia-Pacific. Currency headwinds and regional slowdowns weigh on reported growth in ways that do not reflect underlying competitive position. In quarters of dollar strength or European budget austerity, international revenue underperforms the domestic U.S. business.
Palo Alto Networks is systematically offering upfront free product access in exchange for longer-term subscription commitments, explicitly designed to displace existing vendors. In large enterprise accounts, Palo Alto's sales intensity is high. If Fortinet's renewal rates slip and new logo wins slow, the bull case unravels at precisely the valuation level where multiple compression is most painful.
Palo Alto Networks is the primary peer and direct competitor. Palo Alto trades at a higher revenue multiple, reflecting faster software subscription growth and more recurring cloud-delivered revenue. The key comparison is platform adoption velocity, which vendor wins the enterprise consolidation battle. Q1 results suggest Fortinet is competing effectively with customers who value hardware performance and integrated pricing.
Checkpoint Software is the legacy firewall peer, profitable and cash generative, but growing in the low single digits. Checkpoint illustrates what happens when a cybersecurity vendor fails to transition to a platform model. Fortinet at 20% growth versus Checkpoint stagnation shows the gap between active platform evolution and erosion. Checkpoint's installed base is a displacement target for Fortinet's sales teams.
CrowdStrike competes at endpoint and cloud security layers, overlapping with Fortinet's XDR and SaaS offerings. CrowdStrike grows faster but carries lower gross margins and has not matched Fortinet's free cash flow conversion. When profitability is the primary metric rather than growth rate, the valuation gap between the two narrows considerably.
Fortinet at 42 times earnings is expensive but defensible against security peers when adjusted for free cash flow. The 54% Q1 FCF margin has no peer in enterprise cybersecurity hardware. It funds R&D, buybacks, and competitive pricing simultaneously without capital market access, a compounding structural advantage.
Options activity before Q1 showed a put-call ratio below 0.8, a modestly bullish skew. The implied move priced into Fortinet options was approximately 8 to 10%. The actual 23% surge massively exceeded that implied range, meaning investors positioned for upside earned significantly more than the options market had priced as the base case outcome.
Post-earnings, open interest shifted toward higher strike calls. Pricing continued momentum into Q2. Near-term implied volatility declined as earnings uncertainty resolved, but longer-dated contracts show elevated IV relative to pre-earnings baselines, consistent with a market anticipating multiple catalysts. Q2 results, analyst upgrades, and enterprise deal announcements through the back half of 2026.
Insider activity at Fortinet follows equity compensation plan patterns rather than directional conviction. Ken Shi holds a substantial founder position and has executed planned sales under 10b5-1 programs at various price levels. No notable open market purchases have been reported at post-earnings earnings levels, standard for a founder-led company where wealth is already concentrated in company equity.
Institutional positioning reflects quality growth fund conviction. Long-term technology-focused funds hold Fortinet as a cybersecurity infrastructure compounder, a business where platform economics justify sustained premium valuation. The 23% earnings day surge attracts momentum funds while causing valuation-sensitive holders to trim. Net institutional positioning shifts are the key signal to monitor through Q2.
Fortinet's Q1 confirmed the cybersecurity demand environment has recovered. 20% revenue growth, a 32% EPS beat, 54% free cash flow margin, growing deferred revenue, and a guidance raise. Hard to argue with the execution.
Bottom line, Fortinet is executing at the intersection of secular demand and a firewall refresh cycle. Bull case, platform consolidation driving durable 20+% growth. Bear case, valuation at 42 times after a 23% surge with no room for error. Watch deferred revenue, it leads everything.
Financial data and charts, sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.